Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 7th, 2022. It is 10:48 Eastern Time as I'm starting the video, and what I wanted to do, again, another brief update on the equity markets, and then I want to hit on some other trade ideas. You know, like I always like to say, best to keep it diversified. And again, my job isn't to, tell you what to put your money in, just to share various trade ideas that look objective, longs and shorts, different asset classes, commodities, precious metals, etc. So we'll hit on a lot of those, but I wanted to do an update on crude oil. I have a setup for you on soybeans now. I'll do an update on Treasury bonds, a very brief update on Bitcoin and Ethereum because I got a post out to you this morning. Chinese stocks I've been watching lately. And time permitting, let me make a note here. I'll quick touch up on those educational stocks because a lot of those were Chinese companies. Not all. I did a video about a month and a half ago with some others that were not all necessarily the Chinese educational online stocks. And then the shipping sector, I'm going to update that as well, time permitting. If I don't get to all those, I'll cut it. I'll truncate the video, cut it off, and then follow up in a different post. Alrighty, Nasdaq 100 QQQ. We're looking at a weekly chart. Just to summarize here, we had a bearish engulfing candlestick. Gosh, now it's been what, a month and a half ago. Well, that's when the market topped. Market topped back, or again, to me, the market topped. That's QQQ. Technically, you can say the S&P 500 is the stock market's more diversified, or you can say the Wilshire 5000, which is even more diversified than the S&P. But this is, for all intents and purposes, the Qs are the market. It's just a more concentrated view or index of the stocks that make the biggest difference, those that are really going to take the market up or down, and that's Apple, Microsoft, Alphabet, Amazon, Tesla, Facebook, and the likes. All right, so that's it. So far we still have a top back in November, and just really moving sideways. So it's still anybody's game. I'll give it that until we, clearly put that top in the rearview mirror, and we have moved down, double digits, and can say that we're at least in correction mode. By a technical definition of corrections, a drop of 10% or more. But here's the bottom line. We're still flirting with that key level right there. It's about 378, 379, and again, that was, you had a previous all-time high right there. You had a pullback off there, and we broke out and we back tested it each and every single week except last week since the breakdown candle right there. So 1, 2, 3, 4 weeks of back testing. Had a little, that was Christmas, so it didn't really mean squat. And then again, we're back to it right now. So this is why I'm doing the video. It's go time. Bulls need to, as they have before, step in and buy right here and rally it off and make this a successful backtest. Bears need to take this out, which I believe they will, and take it out with conviction. Great to see it solid daily close below there. Even better to see a solid weekly candlestick. And because it's, I don't know, for everything that I've covered right now based on what's going on in the market, I think it's going to happen pretty quick. Once the masses realize what's happened there with that breakdown, I think you'll see a pretty quick rush to the exits. So you have my weekly targets already laid out, about 342 and change, 299 and change, 268 and change, and then maybe this trend line down here, or either one of those. So that's your targets for the Qs. Monthly chart so far, the month is still very young, but that is not a monthly chart. Now it is. QQQ. Nope, now it is. All right, so here's our monthly chart, and again, I've gone over this, is with zero whipsaws. What I'm referring to are the PPO histogram, really were the PPO lines when they cross. That's what the histogram shows you. Each and every red bar, even a single red bar like the one that happened back when COVID first hit, was associated with a 31% drop in the Nasdaq 100, 36% in the S&P 500. So that indicator, and again, it's not a timing indicator. I always say that I'm measuring top to high, so the crossovers usually come a little after the top. But again, each and every one has been associated with a drop, a double-digit drop. with the smallest drop 13%, and the biggest drop being 55%, and that goes back for well over a decade. You'll probably go back as long as you even have history on the NASDAQ 100 and see that. So that indicator is batting 1,000. It is a monthly indicator, and the month is still very young. This is the 7th of January, so we've got another 3 weeks to go. A lot can and will happen. So it's, again, the onus is on the bulls right now to step in here. But I think we're going to take it out. And then ultimately, again, this is another long-term target on the monthly, that primary bull market uptrend line. So call it what you will. The mainstream media will call it a bear market if we drop more than 20%, because that's, to me, a very old school definition. In the modern markets, thanks to a gung-ho crazy Fed that throws so much money in the market, the rips and dips are bigger. If you notice, the corrections are becoming larger. We've had multiple bear markets, if you want to call it that, within the bull market. So again, to me, a pullback to that level is simply just a correction in an ongoing bull market unless that trend line and my longer term trend indicators roll. But however, it will be a good 30, it depends when we get, if and when we get there, about 35% or so drop just to get down there. All right, let's move on. Let's look at we can go down to the daily chart, and same levels. You've got my primary uptrend line right there. These are the significant levels in yellow, 377.64, and the uptrend line, we're right on there right now. So again, it's go time for the bulls. Bulls need to defend this level and keep us above there, and then ultimately go on to break above the top of the trading range. Otherwise, maybe we continue to chop around. Bears need to take it out, and if they do, then we should go on to hit some of my downside targets. 60-minute chart. We had a potential trend line here the other day. Hit it, had a little reaction on it. I say potential because we only had at the time 1, 2, and we did get a third reaction, but now we've taken it out. And again, the big thing is here. Let me show you on the futures. We're coming up to that level on the, there, gosh, we're already there now. Moved down pretty good since I started the video. So that's it. That was and still is to me a big level, 15,536. It's also a target. Look, if you're an active trader and you want to book profits, you're at the bottom of the trading range. This is where we bounced each time we've gotten there since we first went into this trading range. However, I think it's a good time to if you're an active trader, great. But I think for most swing traders, including what I'm doing, I'm just going to sit tight now, ride out any counter trend bounces on my swing positions, and hold out for a break of that level to move down. So that's your update on the markets. Of course, S&P 500 will need to roll over eventually for the NASDAQ to have a half decent correction. We have a trend line here. It goes off to the left of this chart, but it comes in right here. And that's also a near-term target. So if we hit this, and you have pretty good support right here, that support is a zone. It runs from about 4,600 up to about 4,613. And you have an uptrend line as well. So for an active trader, keep in mind, if we hit that, you're probably going to see some buy programs fire off. And what does that mean? That is about, let me measure it out for you, roughly about another just over 1% or so, maybe a hair over. And so what that would do, assuming that trend line's hit, and that's where the buyers step in. Remember, that's why I like to watch both indexes. You have to be cognizant of that some guys and gals only trade the SPOOs, the S&P 500 future. Some trade the NASDAQ 100. Some trade small caps. Some don't trade indexes at all. But you have your, as far as your index traders, some trade the NASDAQ, some trade the S&P. And so, maybe there's more NASDAQ traders coming in, stepping and buying that support, or maybe they don't step in here, but you see the S&P 500 traders step in. So what that would do is take us down to undercut this level, and I'm showing you a potential scenario that you need to be prepared for and react to, whether you want to try to game it or maybe warning sign to get out of some shorts if we're going to have a counter trend bounce. So let's say we do drop down another 1% or so. You're going to have a breakdown there, and all the NQ traders are going to see that, don't watch both indexes. They're going to see a breakdown. You're going to have shorts pile in, and then at that, right about that 1% or so drop, if the S&P hits that support level and the buyers do step in, assuming they do, you're going to get a reversal. And in doing so, you're going to have a nice divergent low right there on the 60-minute chart. And as I often say, it's these divergent lows, like right here, that led to that, right here, led to that, and so forth and so on. We can go back as far as we want. So it's these divergent highs and lows that typically lead to the swings. I have mixed feelings on it because, again, I'm telling you, I think we're sitting at a level where we're about to hit that point of recognition where you're going to see a lot of stops get hit. We're looking at the Fed raising rates this year, and I think you'll probably see you could see a pretty good rush to the exit. It could just blow right through that support on the S&P. So at this point in time, I'm prone to just kind of sit tight and see how things play out today. And look, if we get this divergent low and they step in, they buy the S&P real hard, maybe you could reverse that. Again, you do what you want. If you think the market's going a lot higher, you buy that pullback on the S&P, or you buy right now and buy it on the NASDAQ. Like I said, that support on the S&P is only 1% below. I mean, you can give yourself let's say a 3% stop loss. If you think the market's going to new highs, that's an excellent risk reward. This is where, again, if I was a bull looking longer term, intermediate even, out, next few months, thinking the market was going to go to make new highs, I'd be buying with both fists right now. But that's not my view, and if it is yours, you can do it. And look, if I'm right and you're wrong, well, you only lose 3%. If you set go long here with a 3% stop loss. Okay, so that's that. Let's look at some other trade ideas and move on. Okay, for a while now I've called what I believe to be a major top in crude. Only time is going to prove whether I'm right or wrong. And, I am still maintaining that. This was, I believe, to be a significant top. This was major support back here, up through 2014. It was broken. Waterfall sell-off. We came in, back tested it, got rejected violently. Big smackdown from about $80 all the way to 40 something. So crude got almost cut in half there, got cut in more than half right there, and then hit it again, rejection. Had that little break, which on face value, again, depending on how you see things, you might have thought it was bullish, but as stated, it was a breakout that occurred with pretty strong and solid and clear negative divergences, and like as it often does, breakouts that occur with divergences and overbought conditions have a higher rate of failing. It failed, and that top is still in. We're running back, or actually we're right back to that level now, the resistance line, which is again about where we are. Give it about, call it 78 or so. I'm sorry, 79, 80, and the divergent high is still in place. And so what you have here is potential. If I draw a little trend line, forget that being an arrow tool, call it a trend line, you have what could be a left shoulder there, a head, and if we can reverse here, which I think we will, we then have the right shoulder right here, right shoulder, head, left shoulder of a head and shoulders, topping pattern, and that should take us down to these targets that I have on crude. The odds of that playing out that way are not exclusive, but will most likely, are most likely to depend on whether or not we get a good size correction, 20+% in the stock market, because crude oil and the stock market have a high correlation. It all has to do with economic growth. If the stock market goes down, it's forecasting a slowdown in growth, therefore a drop in demand and gasoline. Simple stuff. You can go back and look at a long-term chart. The correlation, they have a pretty high positive correlation, but from time to time there's a disconnect between what crude and the market's doing. But again, overall the longer-term trend tends to move with the stock market. So that's my longer-term analysis on crude oil. Near term right here, this is what you want to watch if you are an active trader. And again, if you're even a swing trader, I use the long-term charts, the daily and the weeklies and monthlies, to formulate bigger picture where things are likely headed. But if you want to hone down and get the timing on your entries and exits on your trades right, you use the daily or 60-minute charts. And this case is a 60-minute chart. Crude has this nice bearish rising wedge, negative divergence. Remember, I just showed you it's at long-term resistance as well. And that was that previous high where it popped, that false breakout. But this was at roughly here is that resistance level, about 80. I showed you on that chart. There it is right there. So that's it. So you can either short it here at resistance on the daily, and or, when I say and or, let's say a half position. But now we're close enough to the wedge. You might want to just wait for the wedge to break down, and then you have some minor support there, about 77.65. So if you take that out, here's your targets: 74.95, 72.87, 69.30. And again, if it's a major top, then you just keep, set your stops and let it ride. When you get down here, you're going to have counter trend rallies. You periodically ratchet down your stops and you let it run if you're holding out for a drop of 20+% in crude oil, which I think we could see here again, especially if the stock market rolls over and we start to get some confirmation on the weekly and even monthly charts. Remember, the monthly charts were not even remotely close to any sell signals on the monthlies. No, take that back. We're getting close to some of the earlier sell signals. I need to clarify that. Like for example, QQQ, here's a monthly right here. You have a nice clean up trend line right there. So a monthly candlestick close. But again, we're going to be 3 weeks away. No matter what happens, a month won't close till December 31st. And then we take that out. We'll probably come in, and my target would be initial target this 20-month EMA. But we do also have, again, the month is not over, but right now we have a solid red histogram bar down below that level. So again, I wanted to clarify, we could see in the next few weeks here get some sell signals on the monthly, but we can't possibly get those signals, at least not definitively confirmed, until 3 weeks from now and when the month is over. Next up, soybeans. Okay, I've been bullish mostly long in soybeans since back here, like with most other commodities, put in a divergent low back in 2020 and has been, as with just about all other commodities, in a solid bull market. But then also, as with most commodities, for the last 6 months or more, nothing goes straight up. These things got pretty darn overbought, and a lot of commodities, as this one did, pointed out here, put in a divergent high. That was negative divergence, broke the primary uptrend line, which is right here, back tested, and it's been stair-stepping lower. Then, as also highlighted recently, put in a bullish falling wedge pattern right here, positive divergence, had a breakout back test. So continuation or resumption of the bull market, yeah, but we're still, this is a level I've had here forever and a day, 2350. Let's see, I created that line back November. Yeah. So it's been there at least a couple months, and we hit it now. So that's resistance. That's why the line was there. Now that in itself, can't make a screaming case to short soybeans, but for an active trader, I think you can get a pullback trade here if we get a sell signal on this bearish rising wedge. Let me queue up that chart if I can find it here. I'm going to look at soybean futures ZS. And here's what I'm looking at. We've got a nice clean uptrend line here on this 60-minute chart. You have nice clean negative divergence right there. May be very clear, this is a trade setup, not an actionable trade. We're above trend in a bullish trend. Your sell signal comes on a break below the bearish rising wedge pattern. You can push up, make a new high anytime soon. We'll just extend these divergences. So this wedge could have a little more to go, or we could break down anytime now. And you also have, if you want to, let's say, wait for a little more evidence or take a partial position, then add if this support level breaks. It's minor support about 1371.300, and then your first target there about 1339.53. And then ultimately, I think we can come into and revisit or check this uptrend line, and you also have support there at about 1298. So that's your setup on soybeans. You need to see that wedge pattern break, and could give you a short pullback trade. And of course, you can use that SOYB if that's your thing, using ETN. And just a quick update on Treasuries. I pointed out the divergent low recently. We had some support there. We're a hair below that support now, but not by a wide margin. This market's plagued with whipsaws. So if you didn't go long Treasuries, I would wait till we recover back above these recent lows. That'll give you right here a false breakdown, aka bear trap, and then we could get some a rally going there. So that's just a quick update on Treasuries. So as of now, maybe consider stops if it goes much lower, because so far that divergence is not playing out for a reversal, and we're a little bit below the support. But I think we'll whip back, especially if the markets break down what I started the beginning of the video with, showing the NASDAQ 100 right at that key support level. So if we break down the markets, you should see the institutions step in and start buying Treasuries as a flight to safety as they start to dump stocks. Next up would be Bitcoin. I already did an update on Bitcoin today, an extensive update, so I'm just going to do a quick one here and show you that this is GBTC, a little bit below that 3174 level, but you have BRR still close enough to the that key support level I was looking at. Let me find that for you. There it is. BRR still right there. You know, it hasn't taken off yet, but we have strong, pretty good positive divergence and really nice support around 4184, give or take. And so still looking for the buyers to step in here. They haven't done so. Like anything, don't get married to it. Bitcoin will disappoint you, and you know, if you you know, stick with a trade that's especially if that support's taken out with conviction. But I still like it here. And again, it's all about spreading it around. Take that with some stops. Ethereum, if you are so inclined. If not, if you don't trade crypto, stay away from them. Ethereum's still flirting with that 2661 support, and as I showed you before, you have an uptrend line plus 2319 support right there. So this is more of a scale in or buy zone. That was my preferred, you know, hard level where, you know, going to full position. But if you're scaling in or holding off, waiting to see some type of bullish reversal, or you can wait and scale down to, but not below the trend line, because that'd be pretty ugly technically if that's broken. Next up, just wanted to do an update on, let me just show you one thing real quick with gold and silver while I'm still hanging in there. The euro continues to hold up. This is the euro, put in a divergent low back here, broke out, and it's been in an uptrend, but mostly sideways. You have an uptrend line, a very well-defined uptrend line that the euro, this is E7 euro futures, continues to respect. And so the same thing I was saying, that's why I've cut back on my updates in gold and silver. I've said it before, that the euro needs to pop this level, 114, the top of that range. And if it does, it's going to run up to my target, I believe, of 115.70. That'll be bullish for gold and silver. That's why I'm still hanging in there with those. Still like those. And likewise, you know, the dollar's in reverse, just needs to break down below its recent support level. All right, next up, I told you Chinese stocks. Look, the U.S. markets, if they start to correct, they could drag this down with it. But so far, we're seeing some potential setup here in FXE. It could take off here, but I think it probably has a little more downside to go. There's a downtrend line I'm going to add right now, and I'm going to show you what it would look like if we get another leg down. We'd come down here. You'd hit some... I had an old level back here, 102.91, but I'll tell you what, you know what I need to do really is add a level at these recent lows. This is big support, about 167. I know that's quite a bit lower, so there's just a downtrend line to watch. If taken out, you know, what could happen? We might not get all the way down to that 100, you know, 100.67 level. If we do, great. Maybe this is a little consolidation, a little flag, get down there. But you can see if we reverse soon, we could have a nice divergent low. So maybe we only head down a little bit lower. Either way, watch that trend line. Break of that would should be bullish. PGJ, I think, is the other one. And you can see there's that potential divergence forming. Now, divergence is not a buy signal. Maybe it extends. Maybe it gets burned through. So PGJ could run down. There's a previous reaction low there, but again, there's a down. This downtrend line is not as well defined as FXI. Those are just two Chinese ETFs. Well, Alibaba was on my radar last week, but started to move. I noticed a big bullish engulfing candle, or a big green candle last week, and it popped that level, but we're coming up to some resistance. One to watch as well. So I'm just telling you, I'm kind of giving you an early heads up. We'll keep an eye on the Chinese stocks. There might be some trading up soon. They've been getting the snot beat out of them. You know, Alibaba's down, you know, rightfully so with what China's been doing, but that's down like 66% off the highs. I mean, wow, you can buy that stock 2/3 cheaper than it was back, you know, this, you know, last about a little over a year ago. You know, mentioned the educational stocks. A lot of those were Chinese stocks, but not all of them. So I'm still watching the sector. It's again, you know, the markets, U.S. markets are looking like in correction mode. Chinese markets are still sucking wind. So just setups. This one broke out, but it's not really gone anywhere. That's COE. I shared quite a few, and I did a video. I gave you about 5, I think, in a post last week. But about 4 weeks, maybe 4 weeks before that, I did a video covering all of these ZVO, and I'm just again watching this sector for bullish development. A lot of these bullish developments, a lot of these need to take out trend lines or break out, start moving up on volume. There's extremely high risk, but some have already moved. You know, like this one, PRDO. You know, that one was shared as one of the trade ideas. It broke out, back tested, and it's now already hit that first target of 1251. I didn't get that out to you on the back or on the breakout, but somewhere in here. And so that one, you know, that looks like a constructive chart, right? Nice long-term downtrend line taken out, first target hit. If the sector continues to get momentum, next target's about 14, and then potentially 1734. IH trend line right there. TAL, see setups, just setups, a lot of these still waiting to break out and need to break out to trigger long entry, but just big gain potential if that happens. And there's COE already covered, REDU, GOTU, just pushing, tapping on the line. YQ, not gone yet. There's one here that had a 100% run, AACG. I covered that in the video about a month or so ago and showed it to you. Down here. It was, you know, $1 is always a key level for stocks. They really tried to defend that company as well because they'll face delisting if they drop above it. So it held that $1 level, and then it went on to break out of that bullish falling wedge I showed you there, and it had went up 100% from there. That was a 100% gainer right into that trend line right there, and had a perfect check rally into that trend line, pulled back tested the primary downtrend line I had, and it's been consolidating there. So at least one of them has moved. But yeah, hold off right now because again, if the U.S. markets take it on the chin, speculative stocks, some of these can do well. That's why I'm updating this. Sometimes I love to find niche sectors that have zero correlation to the U.S. stock market, and then sometimes I'll trade those long during a correction against my index shorts because again, they're not getting sold down with the Qs. If QQQ breaks, guess what? Apple, best run company in the world, make just an earnings juggernaut, but it's going to get dragged down with the lot only because of its weighting. The same reason they lift the market up, almost not single-handedly, but have to a large extent when things are going well and money is flowing into the S&P 500 index funds. You're pumping money in your 401k, you're buying QQQ SPY. That's what's lifting up Apple. But when it goes the other way and people panic and they start pulling their 401k out into cash and bonds or other things, or just taking the money out of the market, Apple's going to get sold proportionally larger than every other stock in the S&P 500 and in the NASDAQ 100 because it is the top weighted component. Simple stuff, right? All right, last but not least, told you I mentioned shipping stocks. Really liking what I'm seeing on the shipping stocks. Wish I could make a better case on the broad market right now. Give me 1 second here. I've got to lock up in my charts. Well, I'll have to type them in manually. TNP. What I'm seeing, a lot of these are coming off big divergent lows. Look like bottoming plays. TNK. I can't go over each and every one of them. I have a watch list that should be loading, and it's not right now. Let me see if I can pull it. No, I have a screen off. It's not being recorded now. I have a watch list and it's dead. It's not responding to my clicks, so I've got to manually type these in. Either way, I'll cover these in another update. Hold off. I've been watching them for about a week now, but I've had my concerns on the market, so I'll maybe just revisit these when I think it's safe to jump in or start scaling in. All right, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.